Welcome to the Ontario Mortgage and Real Estate Insights Podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamowen, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions.
This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their home ownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode.
Today, we're starting off with a topic that's on a lot of people's minds: Canadian mortgage rates. There's been quite a bit of movement in the financial markets recently, and it's raising questions about where mortgage rates are headed.
That's right, Steve. It seems like the economic landscape is shifting, especially with the recent dip in Government of Canada bond yields. This is putting some pressure on fixed mortgage rates, and it's all tied to broader economic signals, particularly from our neighbors to the south.
Exactly, Janine. The U.S. economy is showing signs of weakening, which is affecting bond yields here in Canada. There's been an escalation in Donald Trump's global trade war, and the recent U.S. labor market report showed fewer jobs were added in July than expected. This has increased the odds of a September interest rate cut by the Federal Reserve. That, in turn, could put downward pressure on Canadian bond yields.
And while that's happening, Doug Porter, the chief economist at Bank of Montreal, mentioned that the prospect of rate cuts by the Federal Reserve could improve the bond markets, including here in Canada. But he also cautioned that we shouldn't expect a dramatic drop in fixed rates immediately.
Right. He suggested that while some relief in fixed-rate mortgages might be on the horizon, it's likely to be modest. Even a small decrease, like a quarter point, could be beneficial, but the Bank of Canada has set a high bar for any rate cuts. The economy needs to weaken further without a surge in inflation for them to consider it.
It's a delicate balance, isn't it? The ongoing trade tensions, especially with the U.S., are creating economic uncertainty. Trump's decision to increase tariffs on certain Canadian imports to 35% adds to the complexity of the situation. It seems like the trade uncertainty could hinder economic growth more than it would cause inflation, according to Porter.
Exactly. And this prolonged trade uncertainty might eventually lead the Bank of Canada to consider easing monetary policy further. But they'll need to be convinced that inflation isn't a significant threat. It's a waiting game to see how things unfold and how these factors will influence the bank's decisions in the coming months.
It certainly is a lot to keep track of, Steve. For homeowners and potential buyers, these developments are crucial to watch as they could impact mortgage decisions significantly. We'll continue to monitor the situation closely and keep our listeners updated as things evolve.
Now, shifting gears to some significant news from Equitable Bank. They have successfully closed a 300 million Canadian dollars floating rate deposit note issuance. This is a big milestone for the bank, Janine, and it reflects what they describe as strong investor confidence in their growth potential.
Absolutely, Steve. The issuance was actually 2 times oversubscribed, which indicates that there's a lot of investor trust in Equitable Bank's financial stability and future prospects. It's always encouraging to see such positive investor sentiment, especially in today's economic climate.
Definitely, Janine. The notes mature on August 3rd, 2027, and were issued with a coupon of the Canadian overnight repo rate average plus 90 basis points. The demand was so high that the final order book reached 605.6 million Canadian dollars, allowing the bank to increase the issuance size from the original 200 million Canadian dollars.
It's quite remarkable, Steve. David Wilkes, the vice president and head of finance at Equitable Bank, mentioned that this issuance provides a competitively priced source of funding that will further strengthen the bank's capacity to innovate and deliver value to their investors. It's a testament to their leadership and strategic direction.
And it's also worth noting that the issuance led to a favorable repricing of their secondary curve, achieving the tightest spread on record for a comparable term. This is a clear indicator of the bank's solid financial footing and the market's confidence in their operations.
Yes, and while these notes are not eligible for Canada Deposit Insurance Corporation insurance, they rank equally with all of the bank's other unsecured and unsubordinated liabilities. This move is backed by a group of financial institutions, including BMO Capital Markets, CIBC Capital Markets, National Bank Financial Markets, and Scotiabank as joint leads and book runners, with RBC Capital Markets and TD Securities supporting as co-managers.
The Bank of Canada's Financial Stability Report also highlighted that the financial system began the year with increased resilience, which is a positive sign. However, it also cautioned about challenges from global trade conflicts that could have economic repercussions. Despite these challenges, the fixed income and core funding markets have remained stable, providing a conducive environment for banks like Equitable to raise capital.
It's an interesting time, Steve. As of the end of April 2025, Equitable Bank held 134 billion Canadian dollars in combined assets under management and administration. This substantial asset base, coupled with the fresh capital from the deposit note issuance, positions them well to navigate the current economic landscape and continue providing value to their clients.
Indeed, Janine, it's going to be interesting to see how Equitable Bank leverages this new funding to further their growth and innovation in the coming years. That wraps up our discussion for today. Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder. Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time and stay informed with the latest industry insights.